So if you haven't seen the video on the 1 hour daily bias, um, that was a video that I recommended to the stream on Thursday, where if you're struggling with bias, there's things you can do to really like increase, I guess, the your confidence you have in selecting a daily bias and the tools that you use to actually arrive to that conclusion of where price is likely to expand to during that specific session. Because something that I've realized is that if you're not looking for multiple sessions, if you're not looking at London and then Asian and then New York PM session, all that stuff, you really only need one intra-session bias. So where is it likely to expand to during my session? So utilizing something like the daily and the weekly is useful, and it has its priority obviously over the lower time frame. But when we're looking at intra-session, I'm not going to be using that weekly expansion for my intra-session bias, if that makes sense, right? Like if we know on the daily we're likely to open and make that open low to high close, London is expected to have a bearish bias, right? We're not going to be using a bullish bias into London if we have this open low high close expectation on the daily. We're going to be using a bearish bias in London to preferably create that reversal. You could trade into that higher time frame PD array. Or if we've already created the reversal, then obviously then you can be looking for the bullish expansion into there. What I'm trying to say is when you use too high of a time frame for your specific session, sometimes it gets muddy, and the amount of context that you can actually use is it just feels like it's so much, right? When you go from the daily to the 4 hour to the 1 hour to the 15 to the 5 to the 1, it's just so much information where you got to make it simpler. You have to minimize the amount of data that you have so you actually can focus on the things that are actually matter, like the tape reading and making sure that the PD arrays that you're using either in a trade or just to get extra confirmation that price is likely to reverse or expand is actually happening rather than trying to figure out what your daily bias is. So I really think if you're looking at the New York session, the highest time frame you should be going to on a day-to-day basis is probably the daily. I think in the start of the week, if you want to look at the weekly, like where's the weekly like to expand and try and figure out the weekly profile, that has its own usefulness. But I'm really just looking at the daily, and there's only two things that come to mind. Where's the closest buy side? Where's the closest sell side? Where's the closest inefficiency? If I can't really find that, that's the only three things I'm looking for, right? I'm not looking at like, okay, where's the PD raise that being respected? Kind of just glance at it quickly. Are we bullish? Okay, we're obviously bullish in this leg. Here's buy side. I'm marking out the obvious things. Then I'm dropping down the hourly chart. For me, most of my bias comes from the hourly and the 15. So, and the tricks that I like to use is basically as follows. So I'm looking at, I covered this already in that video. So if you haven't seen it, that's going to be helpful. But so advanced market structure is going to be is really important to me, and that's using things like short-term highs, long-term highs, intermediate-term highs, and obviously the lows are also long-term lows, short-term lows, intermediate-term lows, all that kind of stuff. So advanced market structure, obviously we have order flow. So what PD arrays are being respected, what PD arrays are being disrespected, the concept of discount and premium. So where has price been and where is it likely to draw to next? So if we've been hovering around in a long-term premium, we just took out buy side, well, obviously we have a general expectation that we're likely to see discount in some sort of a discount array in the form of sell side or a fair value gap in discount. And I'm going to be looking at low resistance and high resistance. And then session, say session dynamics, but like what London session did for me is going to be important, and previous sessions, and news. I am. Yeah, this will be recorded and posted as well. So this is like basically the same list as was given on that one video, but I'm utilizing these things, and this is how you can get a really, really strong bias. And I love to use the hourly for this specific thing. I think I kind of look at this on the hourly, and then these two on the 15. So low resistance and high resistance. So advanced market structure, you're going to be utilizing things like higher time frame PD arrays, stop sweeps, short-term highs, intermediate-term highs. And if you don't know how to classify those things, T-Trades is a really good video on it, but just briefly, if you want to know, long-term highs and lows have an intermediate-term high and low to the right and left of it. And we're also trading into a higher time frame PD array. So in this case, it's going to be the daily, most likely. Short-term highs are just any swing points. Okay, intermediate-term highs are going to be when we have a short-term high to the right and left of something, and preferably if it's a rebalancing and inefficiency. So if we rebalance an inefficiency and then create a short-term high after that, normally that's going to be an intermediate-term high. And intermediate-term highs are your true market structure shifts. So normally when you see an intermediate-term high or low broken, it's pretty high quality. That market is likely to reverse at least into a short-term discount or reach sell side, etc. Same thing with long-term highs. Short-term highs is where you see total soups. A lot of information. So if you want to go back into the recording, you can once it's posted. Order flow. So PD arrays, those are your typical ones, right, that you normally are using for backtesting. I'm looking at 3 for the most part. Besides buy side and sell side, the 3 kind of order PD arrays I'm looking at are breakers, imbalances, and order blocks. So those are the 3 that kind of pop out to me, and those are the ones that are easiest for me to spot. So the PD arrays really are obviously buy side, sell side, so fair value gaps, order blocks, and breakers. Those are the ones I prefer to use. So in this kind of diagram, you can see exactly what is going on here. We have a bearish breaker, obviously traded through that. We also had an intermediate term low here that was broken. Okay, so we took out short-term low here, and we had a short-term low to the right of it, so that's an intermediate term low. We're also rebalancing an inefficiency, which wicks are inefficient, right? So that there's a little tip there. So as you break that with displacement, that's your true market structure shift. Obviously, you could be using that too, but you got your breaker, trade up in the breaker, we drop down. And you can, another tip for using advanced market structure is if you're bearish, you're only going to be marking out the highs, right? Because you expect the new lows to be broken as long as you're bearish. And when you're bullish, you only want to be marking out the lows, continuously seeing those lows being respected. Same thing with bullish PD arrays and bearish PD arrays being disrespected. And then, yeah, you go into lower time frame, 15-minute chart. You get to see what London did. Did London create an SMR? Is New York likely to see that reversal? Where's the high resistance and low resistance liquidity? And that's normally pretty easy to spot. We have a really good example from Thursday where you have all of these low resistance liquidity pools building up over here, where it's just consecutive stops, right? We don't have any sweep of stops from Asian, even from here. It just looks very, very clean, okay, whilst the buy side is being consecutively purged. Same thing we had on Friday. Although Friday was low probability, I wasn't looking to trade. You still have the low resistance building up on there. And normally every single morning on the 15-minute chart, you can find some sort of low resistance. It doesn't mean that it's always going to be purged, but when you have session liquidity that's low resistance, typically that's going to be the target, and it's much easier, I think, to spot on the 15-minute chart. Obviously, you don't have to have all these colors indicating what session you're in, but that's also just kind of helpful for me visually. And then obviously going into it, you have a London session. So what did London do? Expectations of market reversals. If London didn't reverse, then maybe we're going to reverse in New York. And we're likely to see an expansion back past London. And then news. So what's the news profile? Did 8:30 create a manipulation? And we're likely to see expansion at 9:30. Tomorrow, do we have news? All that kind of stuff. That's going to be based on your economic calendar. So it seems like a lot, but in reality, it's not that much. And I think it's way simpler than trying to look for so many different things in multiple time frames, because this is all really reliant on 3 time frames. I'm getting my bias from really 3 time frames: the daily, the 1 hour, and the 15. And the 1 hour and the 15 are kind of joined together, and they serve the same purpose. So like my bias, if we had trading today, would have been, okay, well, we had obviously a long-term high put in here. We had the SMT with the daily. We dropped down. We held the breaker. So potentially, I'm looking for a turtle soup on this short-term high. And notice the relative equal lows down here in the form of sell side. We also have this low resistance over here. And we also have a daily PD array in the form of a discount imbalance. It's not even discount imbalance, but just an imbalance over here. The discount imbalance will be here. That price is likely to reach into. So like my bias going to Saturday, technically Monday, would be sweep over the short-term high. Maybe I want to see a closure through this bullish order block range, retest, and then a drop into sell side. But obviously that's a lot of stuff to try and break down if you're new, and it definitely is difficult. But at least it's a clean-cut way of how to figure a bias instead of trying to just open up the chart, what PDRs are being disrespected, which ones aren't. And my brain works, I work better when I have more information than less. So I would rather have more information in a very in-depth way of finding bias than just trying to trust one or two things and getting frustrated when it's not as clear and I don't have a huge like kind of narrative as to why something is likely to do it. So I'm spending maybe 20, 30 minutes in the morning trying to figure out a bias. If you're coming to the chart right at 9:30 or whenever your kill zone starts, it's a really, really bad habit because first of all, it kind of induces this fear of missing out right as you jump into the charts because it just feels like as soon as 9:30 is running, you got to get in because you're going to miss whatever's going on because you don't know what's happening. So you should be spending at least 20 or 30 minutes before the session. So if 9:30 EST is when you have to get to the market, you should be waking up obviously anytime before that, but getting to the charts at latest 9:15, preferably at 9 o'clock you get to the charts. You do your daily bias, figure it out, give it 30 minutes. So then intra-session, if you're wrong, at least you're wrong in your daily bias and the execution is correct because you would rather be wrong in your daily bias, the one that you spent 30 minutes trying to figure out, than just kind of a short-term 2-second decision that you're trying to figure out the bias that way. At least that's how my mind works, and I feel like it would make sense. All right, let me go to the questions here quickly. Do you use overnight session from 5 a.m. to 9:15? I do. I have the ETH chart always toggled on. I don't look at RTH. How to backtest right away? You do have to have a model first, so you can't backtest right away. That's something that comes later. But to quote unquote backtest every day, you can technically just screenshot the market every day. So screenshot these time frames from the daily, the 1 hour, the 15, the 5 minute, and the 1 minute. And if you just do that subconsciously, you'll start to form a model and you'll start to see things that you trust and the things that repeat every day. And then you're able to start backtesting the model that way. If that makes sense. Excuse me. Would you ever consider doing 1 week of 9 a.m. EST starts and going through your entire process for session starts? I could do that. That's not a bad idea. Like on a day where expected to be high probability or like on a non-news day or something. Yeah, we could start doing one of those. It's probably useful, right? Like seeing the process instead of just posting the daily bias and then slightly reviewing it right in the morning. Let 9:30 to 9:45 go. You save yourself a lot of trouble. Yep. Even that opening range, if you let that opening range play out, a lot of times you save yourself some trouble. But that first 15-minute range, you're right. If you think about the time dynamics in the morning session, right? I always talk about this because I think it's just beautiful. But if you know you're bullish and you're supposed to put in that 9:30 to 10 o'clock low, then waiting for that first 15 minutes, you're just waiting for that Judas swing. You don't want to be trading in that Judas swing anyways. Preferably, you want to be capturing the large expansion. So yeah, I've figured out that waiting for the macro time most times. Now the one exception to that rule, at least for me, where I can trade right at 9:30 is on 8:30 news days. So if 8:30 has manipulated or 8:30 has done something that I can infer 9:30 is going to do, or I mean infer what 9:30 is going to do, then I'll trade 9:30 to 9:45. Really that first opening range is where I like to see a trade. So on 8:30 news days, high impact 8:30 news, I look to trade between 9:30 and 10:10. And then other days, normally just the macro time is the preferred entry, unless it's blatantly obvious. You get a reversal at 9:41 or something, we drop into a fair value gap. Kind of similar to what we saw on Wednesday, I think. Just a really clean, long into time and then it reverses. Or for the whole week, that way we can see what you think will be high or low probability. We can do that too. We can do it next week. Let me pull up the economic calendar. Let me see what it's looking like. Forex Factory. Monday, no news. Tuesday, no news. Oh, that's next. That's this week. 26th. Monday, we have no news. Tuesday, we got 10 a.m. Let me screenshot it right now and put in daily bias. I'll put it in here too if you want to look at it. So, preferably looking at... I mean, there's... Thursday, Friday look really good. For sure, that's quite obvious. Everything else is just medium to low. Like Monday isn't crazy low probability. It's before 10 a.m. news, but obviously it's a Monday. So I think Monday would be the lowest of the week. It really just increases probability as you get further on. So Monday would be the lowest probability. Tuesday, Wednesday is kind of like that medium range. I would say Wednesday is even lower than that. So if you want the list, I would say Monday from lowest to highest probability. I think Monday, Wednesday, Tuesday, Friday, Thursday. So in order from lowest to highest. My expectation. I'll put this in the other chat as well. Right in here. So that's my expectation. Monday, Wednesday, Tuesday, Friday, Thursday. Thursday being the highest, Monday being the lowest. Got a question. Thursday run, we take London, followed by Asia at 10:49 in the range of 10:30 to 11 o'clock. You expect a low. Did you personally anticipate it running lower to New York PM low or previous day low? That's a good question as well. Let me go back to 12 o'clock. Okay. So, actually, let me go to NQ so we don't remove all those. Oh, it actually saves the replay mode? That's nice. They just added that. All right, we'll go to there. Okay. So, if you drop down to the 5 minute, or actually, let's go to the 1 minute here. I did have an expectation that it was going to drop into PM session low. Reason being, typically, we don't see Asian session as a true draw on liquidity, meaning it can be used as a partial point. Occasionally, we will sweep it out. But if I'm expecting price to expand in a certain direction, I don't want it to just reverse off of London session, or sorry, off of Asian session, if that makes sense. So London session is a good draw. PM session low is also a really good draw. Asian session is just a good kind of partial in my mind. So if I go to, let me go to the predictions chat. What do you say? Thursday, right? Okay, so on Thursday at 10:15, I said time dynamics and the fact that London low was ran by a tick. So right here, London low was ran by a tick. At what time is this? Let me turn this off. Never mind. Kill some boxes. There we go. So London low was ran at 10:12. Okay, I'm expecting that the high was already put in, and I'm thinking kind of as a bank right now. Okay, if the banks wanted to offload their short positions below a timed low, below London low, a tick is not enough of a purge on liquidity where they can get all their orders filled. At least that's how my mind thinks. I don't know if this is true or not, but this is just kind of how I think. Where if we're gonna run out a substantial pool of liquidity where the banks can offset their positions, it needs to be a deep run below that, where obviously there's a lot of people being tripped in or tripped out from their stops, and now we can utilize those stop runs as handshaking. So I was expecting that this is the timed high. I didn't think that this was ever going to be ran out again in the morning session. So I'm looking at where's that new low going to form between 10:30 and 11 o'clock. Okay, we ran this out at 10:12. Obviously, we're expecting the new low to form. The fact that we're dipping below here and kind of the next target is London session, or sorry, is Asian session. I'm expecting it to continue to purge into London or into PM session. I'm getting all these sessions mixed up. So we barely ran out London, formed a wrong low. So if I couldn't see any of this, what I want to happen is that we just into 1030, we just drop all the way into PM session low. But that's also given that we had a lower time frame, a higher time frame draw on liquidity that was much lower on the Monday lows. So if you go to the weekly profile, this is a Thursday reversal. Our Monday lows are all the way down here. Okay. And our discount of the dealing range, if you want to take Monday, or maybe we can take this low to high as well. Discount is below these swing lows as well. Okay, so we're expecting that price is going to reach much lower than it is on a Thursday. And for me, the draw on liquidity Asian session is not something that I want to see a reversal off of this. We could trade into a short-term premium, which we did relative to this child dealing range, but I don't want to see an all-out reversal going up to that high. But that's just also from experience of looking at what are those time lows. Let me pull up my notebook here. So preferably, if I'm looking at external range liquidity, it's going to be time-based, meaning it's going to be not a random swing low. It's not going to be any willy-nilly low. It's going to be all time-based, so session liquidity pools. So the ones I'm looking for are London lower high, PM session lower high, previous X lower high. So this could be previous day, week, things like that, the higher time frame. So previous X, and preferably if you're looking for previous day high, it's going to be most times either the PM session or AM session lower high. But all those session liquidity pools. And then obviously if you're reaching for an internal range, then it's going to be a 50 or 60 minute PD rate, but really fair value gap in discount or premium of the recent apparent in the recent apparent dealing range. So, and then your external range, this is IRL. And then your ERL is going to be, like I said before. So, London, PM, previous day X, previous week X, AM from previous day, but typically this is really the only ones you're looking for most times, and obviously any weekly obvious relative equal highs or relative equal lows on 15 or 60 minute. So if we know it's likely to go from here to here and then back up from here to here, that's literally all it does. Okay. So we know almost every morning session, it's going to go from this to this or this to this. And it's also going to be timed. So if we know if we're bullish and we drop into a 15 or 60 minute PD ray at 9:30 to 10, then we're likely to see this end of the range, one of those PD rays hit between 10:30 and 11. And it needs to be sometimes into lunch as well, but that's what I'm looking for. And then obviously if we sweep one of these at 9:30 or 10, or even before 9:30, then we're likely to see that discounter premium PD array in the form of an internal range fair value gap. So if we take a look at this, let me go back to the 15-minute chart. What are we purging going into 9:30? Well, we have previous day high over here. Okay. Previous day high is ran out prior to, there we go. Previous day high, and this is also AM session, right? So it's a time-based liquidity. Previous day high was ran out going into 9:30 during the morning session. So it's still technically, in the morning session. What then am I looking for? Sell side liquidity? Yes. But more importantly, some sort of a 15-minute or 60-minute fair value gap in a short-term discount. So if I go to my 15-minute chart, our most recent dealing range would be here, right? Because that's a sell side sweep up to the buy side. So if you wanted a dealing range between here and here, you could find a fair value gap. I'm not seeing anything clean in this range. Maybe this, right? If you wanted to count this as your internal range gap, that would be fine. On the 15-minute chart, there's your internal range for value gap in discount, right? Because it's either going to go from buy side to discount to buy side, or sell side to premium, and premium to sell side. Or if you want to go to your 60-minute chart, your 1 hour, Where's the dealing range? Well, you could use this one. There's nothing in there. Or you could use this larger one, and you have a gap. The first gap in full discount is this one. Okay, this is your 60-minute IRL from there. Then if you go back to the 1-minute chart, you can now see kind of why I was expecting not Asian session to be it. Okay, we're not in discount yet of either dealing range, the 15-minute or the 60-minute. And even though we're forming that new low, so yeah, you could take it off at 1032 and be perfectly fine with that. But if you want the full understanding, which I think I did, on the execution from, what is it, Thursday? I went short. I took it off on the London session low. So I took it off here, 1016. But now you can see, okay, the PM session lines up with that 15-minute imbalance. And then obviously lower than that, we have the 60-minute imbalance. So we're going from external range purge to internal range. In this case, it was previous day high to a 15-minute or 60-minute imbalance. And it was slightly outside of the range of 1030 to 11, but it was also into lunch. We kind of got that expansion. And, you know, this is kind of something where it's fine to be wrong and you're still making, hopefully, profit. Like we drop into here and then it kind of stalls out and then we're dropping into the correct direction later than earlier. It's not a big deal, obviously, unless you're trimming stop super tight, which is a conversation for later. But yeah, so this is the two kind of, obviously these are interchangeable, so it could be this or it could be this. Would the not, yeah. We're not looking for Asia to be swept, looking to it for expansion plan, the daily accumulation, manipulation, expansion. I'm thinking about it also like this, Coco. If Asian session typically creates, like what happens during Asian session? Well, midnight opening price, right? So if I'm expecting that to be here, and say we have like a late day reversal, like we had New York is technically a late day, right? We don't have a London session reversal, anything like that. It's an expansion into New York. So if we're trading all the way up into here, right? I expect if the candle is going to be bearish, we're going to have the open high, low close profile. I don't want price to just stop right at that open. That doesn't make sense to me. I would find it really weird if price was going to open, create a reversal during New York, stop right at the open, and then retrace all the way back up. Like that's not a profile I like during the day. It doesn't make sense to me. Preferably, what do you want to see? Expansion through the midnight opening price, and then anything past that, you know, you could form your low, whatever. It could be all the way expanded down here, or it could be slightly past that midnight opening price. So if I know that Asian is likely to be that accumulation, and you're right, and we see that manipulation in London or in New York, then we see expansion past the opening price, not right to the opening price. So that's kind of my also thought process of if Asian is forming that midnight opening price, which you're always going to have midnight opening in Asian, then we need to see expansion past it in some sense. I'm not going to see it just meander around there, especially if I expect this to be the Judah swing. All right, if I know this is the Judah swing, we need to see expansion past. Obviously, going to a London reversal is going to look slightly different, where then maybe you could have a different profile playing out, where if London is actually reversing above Asian, then we're trading back into the range going to New York. Then we could see maybe a New York reversal back into premium, whatever, back into Asian session range, and then we trade off. But that's different profile anyways. But yeah, you're right. It's looking at the daily dynamics of open, high, low, close, expecting the expansion past the opening price. That can be a target because you know it's likely to expand past it, but I mean, might as well just get the full range through it if it makes logical sense as to why it should do something like that. But what the heck just happened? You obviously have an expectation the price should reach towards your bias, but you don't have to trade the entire thing. I took it off at London. That was more than enough. And you have to get comfortable, obviously, in the beginning, taking partials at reasonable low-hanging fruit objectives, and then you start holding it to the real targets. And it just comes with practice and seeing it enough times. If you see it enough times where the London close, so 1030 to 11 creates that new low or new high, and you see it. Like this week was a good example where we had almost every single day doing that kind of time dynamics, you start to trust it. And then you're like, okay, where can I build on? If that's the time, where's the price target? And then you start building on, okay, where's the lows, the highs, where's the imbalances, all that kind of stuff. I'm going to screenshot this if you want it. I'll put it in here. What up, Exotic? Changing the name again. Let me get some water. Last week, August. Oh, yeah. Then we get spring price action. I mean, we do have NFP right after, so kind of 2 weeks of maybe rough PA. But yeah, September, October, November. If we can get the price action we got in April, my gosh. Spring PA is fantastic. I think spring PA, but also it's just you're kind of used to coming off of December and January as terrible stuff, but fall PA is more or less the same. I think spring PA is the best, and then fall is second, and then summer is third, and then winter is normally last. Like December, at least from last year, December was just terrible. January isn't too bad. But December kind of resets the yearly range. Yeah, this summer hasn't been terrible. Even this August has been tradable. It's not been terrible. But that also could be due to the election, so I don't know. And I don't know how the election is going to play into fall price action either. I haven't traded in an election year yet. I don't think. 2020. Yeah, no, I haven't. So I did send out the if you go to Q&A and you go to seasonal tendencies, the election year seasonal tendencies is in there. So I guess August we were expected to be bullish. September looks like it's going to chop around and then drop into the seasonal low, late seasonal low into October. And then we expand back up into December and such. A lot of uncertainty globally, I think, play a part. Yeah. And it's only going to get worse, too. Like, it's not going to go away, to be honest. Hotflux, can you explain the time lows and highs it gets put in on certain times? Yeah. So the ones that I really focus on are these ones. 9:30 to 10 and 10:30 to 11. If you're bullish, you want to see the low put in between 9:30 to 10. If you're bearish, you want to see the high put in between 9:30 to 10, and obviously the other range put in there. And this isn't pulled out of nothing. This is pulled from, I think, either core content month 7 or 10. I always get those two mixed up. But it's pulled from ICT's core content. Meaning there's not really much else to go over. Just it's a very simple concept. And it's really nice when you actually have a bias that's in the direction. You see that timed high or low put in. So you have a bias that's bearish. Well, you want to see a high put in at 9:30 to 10. And it's also helpful in timing the end of the expansion. Like, so if we see something like this put in a 10:20 low, I want to see that low taken out again. Same thing on Wednesday. Difficult day to trade. But if you know, okay, 10:13, we're bullish, we're expected to make that new high, then I want to see this taken out. And you could even form a model just based on these wrong highs and lows being put in. You could find a continuation model or whatever. And then obviously at 10:36, once we form that new high, we can do whatever we want. We could reverse, we can continue, we could retrace, deep retracement. It's not fun to be in. So normally once we put in that new session timed dynamic high or low, I'm looking to close out if I'm in a position in demo. But all my fire alarms are going off. Nice. I don't know if you can hear that. I'm just going to mute until it's over. Oh, there we go. Someone's cooking. I know. Cooking too much. So if you look for the low to be put in at 9:30 to 10, should we expect a high to be put in at 10:30 to 11? Sometimes. You can't use that strictly for bias, though. When you use it for bias, you get stopped out. Reason being, there has to be some higher time frame bias. So it's only useful when you have the higher time frame bias and you see the other part of the range. So I'm looking for, like, if I have a bullish bias, I know we're likely to reach into maybe, let's say London high is really, really clean. There's a reason why I expect London high to go, right? That's our drawn liquidity. Maybe we have daily context as well. We just dropped into a daily inefficiency. We're likely to move higher on the daily. And we have that London high up here. Well, based on just the stuff we were talking about earlier in the stream today, what can we expect? Well, London high is a form of buy-side liquidity. It's also a form of external range liquidity that's timed. So what do we expect price to be coming from? Well, we expect it to be some sort of in this case, a higher time frame for value gap in the form of IRL. And what time frames are these going to be on? Well, it's either going to be a 15-minute or 60-minute discount internal range fair value gap. So just from the bias alone, obviously there has to be some context and everything. I'm just using kind of a shortened process here. But if we know London highs are likely target, then we know we're likely to come from an internal range fair value gap. We're likely to see that gap traded into between 9:30 and 10 o'clock. And obviously, if we get something like a 5-minute change in the state of delivery prior to macro time, then I'm expecting macro time to create some sort of a slight retracement and then we expand into the new range so that the price drawn liquidity, London session, and then obviously time where we form that new high targeting that external range liquidity. And then you just build a model off of this, right? And then obviously you already know that there's going to be some form of low resistance buy side. Kind of over here, you're completing that market maker model. Maybe we had minute opening price over here because maybe this is a New York reversal. So there's like, you can kind of work backwards when you see it enough times where it kind of, and this is all of this was just based off of, we had one line. We know this was London session, that was our drawn liquidity. And now we have everything else that we're looking for. We have a timed low, we have a discounted balance, we have a 5-minute change in state to frame our setup. We have a new high that we're expected to form. So that's what I'm looking for every single day, is this kind of profile. Okay. And obviously you could flip it upside down. If we're trading into a premium array, or maybe we have a bearish bias, whatever, we're either going to be reaching into that 15-minute or 60-minute premium level, or we're going to be sweeping out from a buy side. So maybe we take out London high during 9:30 to 10. Then I'm going to be looking for that discount and balance over here. Right, this is going to be discount during the time I want to see it put in. And that's the same. It's the same exact profile I'm looking for every single morning, is this kind of stuff. Internal range to external range, external to internal, timed low and high. It's either going to be open, low, high, close for the entire session, or open, high, low, close for the entire session. And it's either going to be reaching into 15-minute or 60-minute discount fair value gap, or some sort of a premium array, buy side or sell side in the form of this, right? London PM, PDX, PWX, previous relative equal highs or relative equal lows. And when you narrow it down to that, it becomes so much easier to what to look for. You can siphon out all the stupid stuff that you normally are looking for that makes it confusing. All right, like if we know, okay, we're not looking for this high. We're not going to be looking for the 16:15 high. We're going to be looking for the PM session high. We're not going to be looking for some sort of a 4-hour imbalance to be traded into. It needs to be either a 15-minute or 60-minute PD array. That to me just makes it way easier because I know exactly what I'm looking for every single morning. It's going to be the same stuff and it repeats. And if I know it forms every day, I'm even more confident that I can siphon out the low probability days. I don't even have to look at them. something like Friday. If we have Jackson Hole Symposium and 10 a.m. news where Powell is yapping for 2 hours, I don't even have to look at a day like Friday because I know it's just not going to be worth my time. Where there's going to be elements of both price. So that's price precision is what you're used to looking for. But now you can look for time precision. If we're reversing at like 10, 12, like let's look at Friday really quickly. If we're reversing at a crazy time, like this does not look like a clean profile, right? Like you can probably even just narrow it down just by looking at the time. We have this, and then we have 10:30 in here. We fail to make that new high at 10:30. We are just kind of gyrating back and forth. We reversed all the way down to the AM session low. Now you can see it's both missing precision in time and price, hopefully. So you can, when you're really confident with this kind of stuff and you see it repeat over and over and over again, you could just skip out on those days where you know you either are likely to take a loss or it's just going to be difficult mentally, where maybe you have flaws that are likely to expose themselves in those kind of conditions. So with narrative, if we were ever taking out Asia between 10:30 and 11 o'clock, if we don't meet New York PM or PDX before 11, expect continuation. Then lunch, extend New York AM 11 to 12 should meet the next draw. Yeah, kind of. It's not an everyday thing. That's a very like specific example, right? And it's somewhat cherry picked just looking at Thursday. But yeah, you want to if the draw on liquidity, if say something like as well, if we have the 9:30 to 10 o'clock low, and then we form a 10:15 high, and we see a deep retracement going into 10:30. Well, if I still have a bullish bias and it makes sense, then I'm going to be looking for maybe 11 to 11:30. So you extend that range out where we want to see that new high. You still want to see the new high because it's the wrong time to put it in, but then yeah, you're kind of extending it to AM session. Not all the time will you have something as specific as Asian session low being ran out, so you expect it to go further. But yeah, I'm looking at London session, PM session, previous day. I'm not looking. Asian session is not really one of those qualifiers for me to like completely reverse or stop that time dynamics. It's a good partial because it's a session based liquidity. Like I would still feel comfortable taking something off like that. But say we have a bearish bias and we have Asian session here and London session here. I want London session. I'm not even going to take a partial in this case if it makes sense to you, unless we're like 300 points down. But if I'm shorting off of whatever in here and we have Asian session here and London session here, I'm going to ride most of my contracts or most of my position at least 80% down into London session, or even 100%. I would find it really weird if we just bounced this and go back up. But yeah, I don't like Asian session as a full pull. Maybe partial, sure, but reversal wise, no. Then you could look for other time-based liquidity and for us to trend into lunch. Do you ever look at 15-minute swing highs, swing lows when you don't have session pools to target? I do. So that's part of the external range liquidity thing in here. So relative equal highs or relative equal lows on the 15-minute or 60-minute would also be fine to be. 90% of the time though, those relative equal highs and lows are going to be time based anyways. Like if I go back to the hourly chart here and we look at those relative equal lows down here, that's the drawn liquidity, sell side. What time was this low put in? 4 p.m. PM session low. What time is this low put in? 10 a.m. AM session low. So notice how these aren't random relative equal lows. They look random when you don't have time-based indicators on. But like, something like this is PM session low as well. Right? So you wouldn't be looking for any random swing point. Same thing goes with lunch. Like I'm not using lunch as a target for price during the AM session. If it happens to be a good target because we're framing a higher time frame market maker model and it's like maybe it's a discount PD array, that's one thing. But like we're almost never going to use lunch session as a drawn liquidity for the AM session. And that also helps siphon out very specifically what you're likely to draw to. Like if you want to see a market maker buy model, market maker sell model, that's the two profiles in the market. And okay, we're likely to only draw for this, 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 or this. It's way easier to find a setup and frame something because you can just delete everything else that doesn't matter. Yeah, that's a really good question, but it's hard to word. Watched a video talking about macros, but this guy was mentioning the XX20 to XX40 macro, and he said we should look for turtle soups in these macros. Could you confirm if XX20 and XX40 macros is a thing? I've never heard of it. From ICT's own words, the only macros that exist on a day-to-day basis go from XX50 to XX20. Sorry, XX50 to XX10. The only exception to that is the last hour of trading, where you have 3 macros. So XX20 to 40 is not a macro and does not have the same characteristics of a macro that you normally use. That being said, it's not like you can't find setups in those specific times, right? Like if we're looking between 920 and 940, well, obviously you're going to have some sort of a setup that maybe either a turtle soup or a fair value gap entry like right around 930. But like calling it a macro is wrong because it's not the same exact stuff you see in a macro time. Like, if that makes sense. Like 1020 to 1040 is not going to have the same purpose as the 950 to 1010 macro in price. It's just a section of time where you could find something, but you could mark out any 20-minute time period and argue that's a macro just because you could find something in that range. But it's called a macro because there's a specific set of instructions that price has to do. Okay. Yeah, exactly. You're just playing off the open volatility. Same thing with 820 to 840. I think ICT may have said that was a macro before, but you're just using the 830 volatility as well. So there's volatility like entries you could use, but trying to say that every 20 to 40 is a macro is bogus in my opinion. And you got to be careful with. I'm not saying Hydra is bogus. I just think that at least personally, that kind of looking at the market as everything's a macro, I guess has some of its benefits, but it's wrong in the sense of it's not really true, and there's no precision based on that. Distribution in time in terms of an hourly power of 3. That's probably true, right? Right in the middle. But it's like trying to. I don't think there's anything wrong with trading that range, like I said, but trying to form a whole model based on the 20 to 40 range is wrong. That's going to be where you're going to probably get hurt. It's just might as well just use the stuff that ICT has said it works to make it easier instead of trying to make it harder and read between the lines, which normally reading between the lines hurts you unless you have some sort of a basis in backtesting as to why it should work. Favorite macros, definitely, you already know, 950 to 1010. Second favorite would probably be 1050 to 1110, and then the 850 to 910 macro on 830 news days. I don't look at anything else besides the 950 macro. Has the most volatility in the day. If you're going to look at London session, I think the 350 to 410 macro is the highest volatility one in the range. But 1050 is also kind of nice. You either have a continuation towards draw or a reversal, or it really doesn't do anything because it's kind of later in the session. Remove all this stuff. Yeah, 1050 reversals have been nice. $950 is just going to be the easiest one, to be honest. But 1050 is also nice. I think also when you understand the time dynamics, it's easier to trade silver bullet too. Like, either could look for the first 30 minutes to find an entry. If you know we're likely to chop around those 30 minutes, wait for the secondary 30 minutes to form the new higher low targeting the opening range. Like, we're either going to be referring back to the opening range or for some sort of external draw liquidity. If I'm going to watch actually one setup for life again today, take extensive notes. I watched it multiple times before, but I'm gonna go back and watch it today, see if I missed anything. Just because I think it's important. It's low-key it's definitely the best video he dropped out of the 2023 mentorship, but still probably one of the best ones he's dropped ever, in my opinion. Flux, what's your exact entry checklist? I'm new to this. Exact entry checklist, assuming we already have our bias, for me is 15-minute SMT, probably between NQ and ES. Timed low within a PD array. So either 15-minute or 60-minute. ERL or IRL, I need a 5-minute CISD and then a 1-minute fair value gap with order block, or fair value gap plus breaker entry. Targeting time and price. And the entry also needs to be timed. So entry is going to be a timed entry based on the economic calendar. Yeah. Obviously, mine's going to be different from everyone else's, though. But the two really entries, if you're looking for specific entries, it's either going to be this or it's going to be this. Two entries I need. Breaker doesn't need to drop in a discount, or it's going to drop in a discount and we're going to fair value up with a order block in discount the stealing range. Right. So that's the two entries that 99.999% of people need. Either a retrace into premium or discount with a fair value gap, preferably with an order block. Doesn't need to be with an order block. This is extra. Or if you're scared of missing it because it's going to run away, look for the breaker. If there's a clean breaker and we're trading into a higher time frame PD array, then you can use the breaker. If it lines up with the fair value gap, stop needs to also be reasonable. And then we can trade off that. But like this will, 99% of your entries regarding morning session is going to be based on this. You don't need anything else. I would say even you don't even need anything else besides this. The breaker is so rare most times. It's not super rare, but it's rare enough where you don't have to worry about it. You can miss some entries and be fine. I don't like missing entries that are within my model because I'm looking at a higher time frame. So these two for me are good enough because I'm not just using this as this is the entry. This is the easiest thing. Everything else is the hardest part. And focusing on entries is going to be the wrong way to look at it. So an entry checklist is good and all, but this is subsequent to literally the everything else. So the whole other analysis, like every other important part, and then into the entry. So bias, narrative, seeing confirmations that we're likely to do the things. Then we look at the entry. And the entry is like robotic. If we don't get this, 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 and this, then I'm not looking to enter. It's like it should be a flow chart. ICT library is like the lost Alexandria library. I know. At least it's not burned down yet. Just wait till his books come out. And as for all the sigma, alpha, omega setups, etc., does one of them show every single day, or is there days where some of those never show? So there's about 7 or 8 profiles in that PDF. I would say that 90% of the time, maybe 80 to 90% of the time, there's one of those profiles every day. Very rarely do you get one that's like out of the ordinary, like a continuation day where you just see 9:30 to 10:30, just huge dump off or sell off, or it spikes up. Like that's not really something that's tradable in my mind anyways, continuation days. But yeah, for the most part, those 7 or 8 profiles show up every single day. It's like in here you have 8:30 being traded back into, you could count this as a sigma profile basically. That's the most common one that you look for, but it's not something I'm like ingrained into my mind. I'm not like, oh, is it this one? Is it this one? Is it this one? I just know, okay, it's likely to do one of those things. It's either going to be a clean market maker model, or we're going to have a deep retracement at 10:30 to 11, which is either theta or beta. If you have that thing pulled up, like, how can I avoid those ones? Is what I'm trying to what I'm interested in. How can I avoid the low probability setups? So if I see dynamics like Monday was I think a beta setup where we got an internal range stop sweep going into 10:30. Yeah, one of these stop sweep here. But also, there was never a 5-minute change in the state of delivery. 5-minute was up here. If you go back and you can cycle it off, but we never get the 5-minute change in state. So entries before that would be invalid technically, which I didn't see in the first place. So I think I took a loss on Monday. Let me go back. Or I just didn't trade it. I'm trying to remember. Futures trades. What was the date? The 19th. Oh yeah. So I took a loss on that. I got one partial off, but that was it. Yeah, when you can avoid those kind of days, it's easier. After a while, you just see it and know, right? Yeah, it's not like I have the PDF pulled up. It just kind of becomes ingrained where it's a general thing to look for. I'm more focused on everything else that's important to me. So PD arrays, bias, getting the confirmations that I need to enter in or sit out. When it starts to get boring, it's a good thing. Yeah, I agree. It'll never be, for me at least, it'll never be like boring enough where I don't want to do it, because this is just, at least for the past 3 years, this has been my obsession. And I feel like for most people, it kind of has been too, right? But it is boring in the sense of like, it's nothing new. Like, it's just like the same kind of stuff. It's slightly different every day, but Coco, I had the same exact thing. I literally have the same exact thing on my desk. I got it back in I think January of this year. Literally when I was in a position, I was like I don't want to be on my phone. So let me just solve a Rubik's Cube really quickly. It does help. Fidget with your hands too. Because the problem with opening up your phone or trying to watch YouTube is you lose focus because you introduce like external stimuli, which is not good for focus. It kind of trains your dopamine the wrong way. So yes, having something like shuffling cards or doing a Rubik's Cube, it, especially when it's muscle memory, like it doesn't change your focus too much. So it's like easy to just finick with and it's fine. I agree, Tom. I think that part for me will never go away. Like when I see those take profits hit, like when the amount of precision it has, it still just blows my mind. Like that part will never get old to me. You're like, yeah, this, like it's still like when I go back in and I screenshot the days, even if I watched it live and I go back in and I screenshot, I'm like, this stuff is so similar to the screenshot I just took yesterday. Like, I don't know how people don't see this stuff. Like, I don't know how I didn't see this stuff back when I was trading retail. Like, it just seems so stupid to me. Thanks, helps clear it up a lot. Been starting journaling my trades and it's just been the basics: entry, TP, stop loss, confluences. What do you journal per trade that helps collect important data? I don't think I'm tracking the most important things. Send me a DM after this and I will send you a couple of zip files from my Notion. And it's basically every time frame, but I'm marking up, if you want it quickly, for me, I'm marking out the daily, the hourly, 15-minute, 5-minute, and the 1-minute. Okay, so I'm taking screenshots of every single one. Now on every single one, I'm marking up what's important. And also, what would I be using whilst... So these are the two things I'm marking up. Okay, so these time frames and then this. So what is important to me? So on the hourly chart, the thing that would be important is maybe the draw on liquidity. So I'm maybe building up, okay, where's the draw? Here's boom, boom, boom. Here's my intermediate term low. Here's my internal range fair value gap. Here's my external range liquidity, all that stuff. 15-minute chart, maybe here's my low resistance liquidity. Here's even further why my draw is there. And then when I drop down to the 5-minute and the 1-minute, you're gonna be marking out what's important. So obviously entry, exit, distance to TP, all that kind of stuff. But also, what would you be using during tape reading? This is the most important part when you get to the lower time frames. So on the 1-minute chart, I'm not going to be marking out things like mitigation blocks all that often, or things like volume imbalances, because for me, when I'm tape reading, I'm not looking at those kind of things. I'm looking at premium or discount. I'm looking at order blocks. I'm looking at breakers. I'm looking at fair value gaps. I'm looking at internal range turtle soups. I'm looking at time. So what time does the reversal happen? What time does the entry happen? What time does the exit happen? What time do we put in the high and low of the day? That part is really important too, because then you get even more trust in something like the 950 macro when you see the entries happen all at the same time. But I'm not going to be marking out, every single PD array that's in this 1-minute chart, because it's going to be useless. I'm going to be marking out, okay, if I were to watch this again live, and now I have the benefit of hindsight, what are the PD arrays that I would see myself marking up? If that makes sense. So if I go to, let me pull up my Notion really quickly, and I'll show you exactly the 1-minute chart from Thursday of what I marked up. We can actually just go through the entire one, and you can see it exactly what I'm talking about. Let me pull this up really quickly. So Thursday, that's not what I wanted. Okay, let me stop streaming here. I'm going to restream Notion really quickly. So you have to reopen it. Let me switch my recording as well to Notion. There we go. Okay, so we're going from the daily to the hourly to the 15 to the 5 to the 1. So the daily chart, same thing I said earlier in the stream. I'm marking out what's the PD array. So in this case, we have daily SMT. So that swing high I'm marking out, and I'm marking out this gap. So literally two things I'm marking out on the daily. This other stuff is on the lower time frame, but I'm marking out that high, this gap. I don't care about anything else in the daily. It's just my personal preference. Others would disagree, but that's just what I do. And you kind of have to figure out what works best for you. Hourly chart. This is bias. For me, this is where I'm going to be building my bias. So I'm going to be marking out. Normally, I like to keep the annotations on for a couple of days, at least for 3 days, so I can get kind of the narrative as to what we're doing. So you can see, working from left to right, we have the stop run here. We swept out buy side, traded up. We're holding this PD right here. We took out buy side again. We have all these intermediate term lows I'm watching as well. Now we have a short term high. We traded up into a daily daily buy side with the SMT, and we broke down with all of this low resistance sell side below us. So external range from previous day down to internal range and discount. And obviously, the different things I'd be marking out, keeping that 15-minute chart, same thing, kind of narrowing it down. So low resistance liquidity I've marked out there. We have the session indicators also posted there, and then another fib projection from the last manipulation leg, targeting that -2 to -2.5, which we also did get the 4. But I'm looking at the -2 to -2.5 as my true kind of target, which I normally keep. All these things I'm marking out normally on stream anyway, so I like to keep it very simple on the higher time frames. As we drop into the 1-minute, you'll see it a little bit harder, like there's a lot more stuff. 5-minute, only thing I really care about is marking out the SMT. So if we don't have the SMT on 15-minute, which we do have a slight SMT there, but on the 5 minutes, it'll be easier to see. I'm marking out the SMT, and then the CISD is going to be the most important to me on the 5-minute chart. So do we get closure and confirmation that price is likely to reverse and start to expand? So that's really all I care about. Everything else is extra, but you can see the dealing range there. Short-term sell side and any PD arrays maybe. The 1-minute chart, you got the most stuff. So I like to keep these very similar every single time I screenshot it. So I've got sell side marked out. I've got fib projections from the 1-minute. Where is that lining up? I've got the SMT. I've got, premium to discount. the entry time, the reversal time, time we hit TPs, time we form a low, distance to take profit, any PD rates in the 1 minute. That's obviously going to be important. So breakers, fair value gaps, inversion fair value gaps, SIBIs that maybe are used later on. Time also really important. So I'm marking out 8:30, 9:30, 10:30, 11. And then any notes that I have as well. So like this is obviously extensive. I'm kind of schizophrenic with it. Like you don't have to have this much stuff, but I have the market maker profile. I have the news. I have what external range liquidity is taken. I have the setup probability. That stuff is not necessary. Just at least have the news so you know. And then I also have any notes. So here, different field projections. Like you don't gotta read this, but I'm adding some notes as well that I may find helpful. And you can see like same stuff over here. We're going daily down. I can show you the 1 minute chart. Like same kind of stuff, right? Distance, entries, SMT, soup, PD arrays, times, for value gaps, whatever. Same 9:30, 10:30, 11 marked out. And then you can go back up. But the other stuff is going to be the most important. Here's your hourly, right? 15, 5 minute. What do we have marked out? CISC there. SMT. You see it all. So that's the proper way to journal. I used to journal. This is how I used to journal. This is how I used to journal for an entire day. Would be like this would be my screenshot for the entire day. And it's like looking back at it, obviously some of these as we get further down into getting better at screenshots, like this is a little bit more helpful, but it's not because great, it's the 1 minute chart. Who cares? Like what was the bias? What are we trading into? What is the reason why this setup works? All that stuff is important. And obviously, yeah, like we get further into it, yeah, you have more stuff marked out. But even to me, like this is useless to me at this point. I have no idea what's going on. The 15-minute chart, yeah, we have some stuff, but like this is terrible. I can't pull anything important. I can't make any conclusions as to how to build a model, what to avoid. It's very, very difficult to do any of that with that kind of analysis. So you should be giving yourself more data on the day than less data. So if you wanted to go back into it, you actually can build a model. And that's how you do it, is by looking at extensive data from multiple time frames, where then you can start framing something that repeats. Let me scroll back up. Loki, the hardest part is keeping yourself in check after big wins. I have the other way. Winning for me is like, I hate losing because I'm just overly competitive. Like how you do one thing is how you do all things. So for me, like in sports and even like something like in video games, I hate losing. So like that was like a really, really difficult thing for me. Winning is like, it's just, it doesn't give me anything, to be honest. It's just like normal. But that's just my personality. So, I mean, those are the things you got to figure out, right? Flux was Friday, a trading day for you with all the news. I got some clean subs, but don't know if they're valid subs since we had the Jackson news. Nope, I didn't even pull up the charts on Friday. I didn't stream. I didn't care what Friday. I didn't even journal Friday's price action because okay, that's wrong in the sense of you should be journaling it. But for me, I know there's not a setup there, so I'm not going to be screenshotting. I'll probably do it today, but we have Powell speaking Friday. So end of the week, we're expecting kind of either continuation through Thursday or we're tracing back into the range. But we had Jackson Hole and Powell speaking as 10 a.m. news. So I don't like any of that. Time-wise, I don't even have to look at the price. I don't care what the price is going to do. Backtest a year's worth of news days. Look at the profile. You'll know in the future what to avoid. Right. It also comes with like there's news, and you can kind of know what days you're going to be avoiding and what days you want to be looking at entirely. But then there's also like price, right? So even just because it's an 8:30 news day doesn't mean guaranteed we're going to get a setup. And having expectation is going to kill you. So if you have Just think about it logically, right? Even if you have 8:30 news and you go into the market and it looks like seek and destroy conditions, you still can't participate just because it's the news day. So you have to look at the day, so time, then you look at price. If price is bad, then you still can't trade it. If the news is good, if the daily profile is good, and we have good price, then you can engage. But then say you have all those setups, but then price doesn't reach into premium like you're looking for on the 1 minute chart, you don't get a setup there. So it's like there's so many different opportunities for you not to take a setup. And there's a very slim portion where taking a setup is okay. When you get to that point, then you remove all the stuff that's like being good at trading is not improving hella from the beginning. It's just cutting out the stuff that is sapping your mental strength and your profits from you. That's what it is. Obviously, you get better as you go on. That's just how trading works. But you realize, okay, if I already can trade and I know exactly what's going on really high probability day, then you remove everything else out and then you just look at those days and then executing becomes much easier. Hi Flux, can you show me examples of intermediate term highs and lows with short-term highs and lows? Yeah. So there's a really good video from T-Trades. Let me pull it up on YouTube really quickly and I'll send it to you. This is the original video that ICT posted was episode 12 of the 2022 mentorship. And that's probably the most difficult video he's ever posted in my mind. At least from watching like that. The first time watching that, I was like, what the heck is this? And then T-Trades put a video out about like a year later, 2 years later. T-Trades. And it made a lot more sense, and it's really, really important. So here's your watch both of these. I think, actually, no, this is the more important one. This is the advanced market structure. So if you're struggling with it, you do that. But if I'm looking at, let me go to this chart. So higher time frame. If you're trading to any higher time frame PD array, preferably it's going to be your time frame paired charts. So you don't need to do this, but it's helpful. Daily goes to the 1 hour. 4 hour goes to the 15. 15 goes to the 1. And the weekly goes to the daily, I think, right? You don't need to use that, but you can. But long-term highs and lows need to be placed on higher time frame PD arrays. So if we're taking out something like a daily swing high, then that's going to be your long-term high, right? But we also have to frame it. Is there a intermediate term high and low to the left and right of it? Well, we have an intermediate term high here and an intermediate term high here. Intermediate term highs can be classified if there's a short-term high to the right and left of it. And preferably, it's going to be rebalancing in efficiency. So notice how we came up, we rebalanced this gap. Obviously, if you drop to a lower time frame, there's going to be a gap in here too. But we rebalanced, and we have a short-term high to the left of it, and a short-term high to the right of it. Short-term highs, short-term lows, any swing point, really. So something like this, going into maybe London session on Friday, we have a short-term low, short-term low, short-term low. This is an intermediate term low because you have a short-term low to the left of it, short-term low to the right of it, and we're rebalancing inefficiency, which I know on a lower time frame, wicks are inefficient. So this is going to be a gap on a lower time frame. But this is obviously, you don't need this. This is difficult, but even just categorizing it like this. And the trick is, if you're bullish, you're only going to be marking out the lows. So you're going to be watching the lows in the PD arrays. And if you're bearish, you're going to be only watching the highs. So I'm not marking out the lows in this case. I'm going to be watching them, making sure we're getting those lower lows. But I'm more interested in the PD arrays being broken. So I want this to actually be traded through. Same thing with this 15-minute inversion for value gap. I want it to be traded through. But like in this case, I wouldn't want to see this intermediate term high taken. I would like to see maybe the short-term high ran out. And then we drop back into the sell side. And you can kind of see the market maker sell model forming in here too. And I use this kind of stuff for daily bias only. I'm not looking at this kind of stuff on the 1 minute chart. So only on these higher time frames am I framing advanced market structure. Hey Flux, new here. Do you still do one-on-ones? I do. They're by request. And I got to schedule actually some for next week. But if you're interested, just send me a DM. And then if you want to register, the link is in the resources tab. So yeah, just let me know. Flux, would you say a long-term high and low is a time-based high and low? Not all the time. It's normally obviously framed on a higher time frame, and it can be time-based, but it's not going to always be long-term. So if you're asking like on the 1 minute chart, if I'm looking at those time-based highs and lows as long-term, they can be for the short, for like the session. Like in this, we have an intermediate term high to the left and right of it. Sure. Are we taking a higher time frame PD rate? Yeah. So yeah, that would be maybe for the 1 minute a long-term high, but a 1 minute long-term high is absolutely nothing in the grand scheme of top down. One more thing, how do you filter out which dealing range to use? I hate giving this answer, but it does come with a little bit of experience. But I'm looking at, if it's a bullish dealing range, I'm looking at the most recent sell side sweep to the current high or the buy side sweep. So in this case, we have a sell side sweep here up to this high. That's the dealing range I'm looking for. Okay, any dealing range within it, so like this low to high is child to the parent dealing range. If we're bearish, then it needs to have some sort of a buy side sweep to a sell side sweep or buy side sweep to the most recent low. So this would be our bearish dealing range, right? Buy side up there, swept out, drop down, form that new low. That's our bearish dealing range. Okay, and if you drop down the 15-minute chart, same thing in here. You have a high to low, that's our bearish dealing range. Our bullish dealing range between the low to here. And it's dependent, obviously, on the higher time frame bias as to which one you're going to use. If you're looking for premium or if you're looking for discount. So if I'm looking for, like on the 15-minute chart here, if I'm looking for the bias to be bearish and we're going to reach into this sauce of liquidity, I'm not going to be drawing out this dealing range because I don't need it to drop into here and then trade back up. I'm going to be marking out this dealing range for it to trade into premium first and then trade lower, if that makes sense. But dealing range is also something that's a little bit more subjective. It's not like a clean cut thing you can use all the time. So you do need some experience in marking out what it looks like and kind of just doing it. And it becomes easier over time. But yeah, bearish dealing range is a buy side sweep to a sell side sweep. A bullish dealing range is from a sell side sweep to a buy side sweep or the most recent high or low. Yeah, August is always a difficult month. So even if you were to sit through it, it's really good experience. Because I'm telling you, when fall comes and if fall is as good as spring was, it'll be so easy. Like in April, I'm still salivating over the April price action because there was like 2 weeks straight in April where we had to set up almost every single day. Like, and it was a clean setup. And when you get to those situations, you're like, it's beautiful. It's salivating is crazy work. Yeah, that's true. All right, if you got any more questions, you can put it up in the chat. Who is it that reached out? Mojito? MJTO? I don't know how you say your name. I'll make sure to let me accept that right now before I forget. So if you want to book a one-on-one, let me know. It's by request. Do you expect better months in terms of PA? Yeah, for sure. September, October. Yeah, even the first 2 to 3 weeks of November are also pretty good. But I mean, those kind of months go quick, so don't feel like you're obviously going to miss out, but capitalize on the opportunity. Okay. How's December PA? Normally it's terrible. Like arguably the worst of the year, in my opinion. I actually think December is worse than August for the most part. Like if you're gonna take a break, get out of the state or country in December. It's not worth it. How do you know this? It comes from experience, and it just comes from ICT directly. Like he's mentioned multiple times what months are good in his 2022, 2023, and I assume 2024 now. But it's in his core content. It's in all of his videos what months he talks about. A lot of it he covered in the 2023. But yeah, I mean, think about it as well. Power of three, right? If you have a yearly expansion, you don't want to be trading close to the opens and the closes. Obviously, you want to be preferably trading around these kind of ranges, where it's easy to find those reversals, and we start to get that really tight expansion. Yep, there you go. January to April is the yearly accumulation. April to May is manipulation. May to November is distribution. You also don't realize, but in that post, or maybe you do realize, but in that post, he just gave you the time power of three. So we already have price power of three, but there's your time power of three. And that also maybe ICT's logo, maybe. We won't get into the rabbit hole though. Nearly, yeah. Here's the ICT logo dimensions if you want it. And now it's gone. All right, we'll wrap it up here. Yeah, if you got any more questions, you can obviously put them up in the general chat. Send me a DM. If you want to book a one-on-one for next week or maybe even today, let me know. What time worked best for you? We can schedule that. But yeah, I'll post a stream recording later today once it's done rendering. It'll probably be public, to be honest, because I think there's some valuable information in today's stream where I think everyone would like to see that stuff. But enjoy your weekend. Get some rest away from the charts. Spend time doing things that you enjoy. And make sure you review your journal as well. Weekends are good for reviewing. So go back in if you broke any rules, if you did something stupid. Make sure it doesn't happen again by actually reviewing the mistakes you made, or even if you did something good, pat yourself on the back and make sure your mental is good going into next week for the executions. So take care of the weekend. I'll see you guys hopefully on Monday or Tuesday, and we will talk then. So take care and stay safe. Peace.